have to sign up. So you sign up, and anyone else that isn't here, they're not allowed to sign up, yeah?
Okay. Hello, everyone. My name is Marko Čular. I'm from the accounting department from Faculty of Economics Split. Okay. Okay. I will start today with our workshop number 3. It's mean financial model, as I told you yesterday. Okay. Okay, okay. Please, quiet, please.
Here's Marko.
I will start now with financial financial model. First, I will start with basic financial statement that you need to put it in your business model. As I told you yesterday, every year students forget put it all information about finance in his business plan. I can start now with our financial model with basic financial statements. First, I know that there are some students that they don't have some experience in economy, especially in the part of business, especially in the part in the finance, etc. Today I will first explain basic financial statements. First, imagine your business is a tree, okay, like an apple tree. This is your business, okay. The first financial statement is income statement. Income statement or profit and loss statement. The income statement measures the fruits of your business efforts. Okay. Like a tree, your business produces an annual yield that gets reset every year. Okay. The income statement or profit and loss statements starts at 0 at the beginning of every year and measures the annual yield. Here we have one example of income statement or profit and loss statement. Income statement here is an exam of olive tree winery. Profit and loss statements or income statements have some components. First, always you start with revenues. Or for this exam, it means wine sales. We start with revenue, then you continue with cost of wine sold. Difference between revenue and cost of wine sold is gross profit. Okay, we can continue. Difference, then we need to take care about other operating expenses. For example, sales, marketing, etc. Difference between gross profit and operating expenses are operating income or operating loss. On the other side, we need also take care about interests. If you take a credit, or if you take a loan, you have interest. It's the financial part of our income statements. Difference between operating income and interests are income before taxes. You also don't forget for our government. In Croatia, the value of our tax is 18%. 18, yeah. Difference between operating income, before taxes is net income or net losses. Okay.
Is that for corporate or that's for personal?
Is that?
For corporate or for personal as well? Is it 18 always?
No, in Croatia is 18. In Croatian is always, yeah.
Just for companies?
Yeah, for business, yeah. Not for personal, just for business, for the companies. Okay, Marin, please show me you get some materials about the financial model. Lana show you later. Okay, in your financial projections, you need to take care and think about first the revenues. Revenues represent a positive element in PL statements. You can also make some monthly revenue projection or annual revenue projection. As I see yesterday about your ideas, I see that you take care about your revenues. But the biggest problem that you don't take care about the expenses or the costs. Okay. The second one is projection of expenses. You need to take care about cost of goods sold, selling and administrative costs, and interest expense cost. Cost of goods sold is, for example, direct material, workers' wages, amortization. Selling and administrative costs are, for example, depreciation, marketing costs, traveling costs, education costs, etc. And also, when you make profit and loss statement or income statements, here is good example how to make annual profit and loss statements. Annual profit and loss statements for 1 year. First, you start with revenues, that minus with the cost, which is from the revenues. Difference between revenues and COGS is gross profit. Difference between gross profit and selling and administrative costs are operating profit, minus interest costs, if you take a credit for your startup, for your business. You have profit before tax, minus income tax, you have now net profit. In your presentation, you always forget this part of financial model about 3 basic financial statements: profit and loss statements, cash flow statements, and balance sheet. It's not necessary to put all this information for your picture or for your presentation. Just to put it a little information, make just annual PR for 1 year maybe. It's not necessary more maybe for 10 years. Just to make it for 1 year. That evaluators have information that you understand in this part of your business model. The part of workshop number 3, financial model. Okay. Do you have any question about profit and loss statement? Any question about profit and loss statement? No, we can continue with presentation. Now, at the end of each year, net earnings, it means net income, it means your profit, is added to balance sheet. Is added to balance sheet with return earnings. Okay, it's clear. A balance sheet is a picture in the time, just in the time. Income statements is from the one period. Balance sheet is in the time. What balance sheet measure? Balance sheet measure the cumulative result of your business efforts. It sustains your business over the long haul. A tree cannot bear fruit without the support of strong trunk. A business cannot produce annual net income without a solid balance sheet. Okay, let's understand. The balance sheet measures what you own and what you owe. What you own is called your assets, and what you owe is called your liabilities. You know it. It's short-term and long-term liabilities, also long-term, short-term assets. The equity section is the difference between assets and liabilities. It means your equity, stakeholders or shareholders' equity. If you slice, open the trunk of the tree, you can read the story of each year in its life. You need to take care and think about this information. You will find lean years with little or no net income, or on the other side, and strong years with plentiful net income. This is we combine now a balance sheet statement and profit and loss statement. Those rings are like the equity section of the balance sheet. It means accumulated return earnings are equity of the company. Equity is a part of the balance sheet. On the one side we have assets, on the other side we have liabilities and our equity. How it means? They show to us how we finance our business. From own capital, or we, for example, take the loan from the bank. Okay, here we have now here some exam of one balance sheet. On the one side, credit side, we have what we own. What we own in the short and the long term. For example, cash are in the short term. Property and equipment are in the long term. What we own in the long term and in the short time. What we owe, take care about liabilities and equity. Liabilities plus equity are total assets. Understand? On this side here is what we own. Here, how we produce and put our money in our company. Okay, Martin, we can show you now. You can show you now the other part. Okay, as I told you, assets and sources of financing. Assets is a patent, license, land, building, machinery. As I see yesterday, you have a lot of exams of your ideas, some application. What is application in our balance sheet? What is application in our balance sheet? How we put application, it means software, yeah, in our balance sheet. As our software, as a part of our software, and as a part of our patent. Patent and software is a part of our assets, long-term assets, non-material assets. We have some material assets as land, etc. Sources of financing, it means what we owe. You need to take care about your capital and our liabilities. What we recommend that fixed assets should be financed from long-term sources. When you make your balance sheet for your financial model, you need to put all this information about fixed assets and current assets. What we own, fixed assets and current assets. For example, fixed assets are building, land, machinery, etc. When we talk about fixed assets, you don't forget one part of our balance sheet and one part of our income statements. What is? You know it. Do you have information, and do you see for information? Do you hear for amortization? You know what is amortization? Yeah? This is the part in balance sheet and the part of the cost of income statements. Don't forget, when you prepare your balance sheet for a long period, for a period of the time, don't forget take care about your amortization. Okay. On the other side, we have what we own. We own total capital and liabilities. Shareholder capital and liabilities in the short time and in the long time liabilities. Okay. Marina, please. Do you have any questions about how to prepare one balance sheet? When you start with your idea, you start with idea, for example, application. You put it application in your finance model. You put it in your balance sheet. For example, patent, software, you need the land, you need the office, etc. Also for your business, you need the cash, is a short-term assets, and long-term assets, for example, land, etc. You need to think about all this information. It means you need to think about all this information, what we own. On the other side, how we buy the land, how we pay for the patent, etc., etc. How we buy the software. If you want, you can use the loan, you can use the credit, you can put it your money in the company. It means shareholder capital. It means capital and liabilities. All these things you need to take care when you make your balance sheet. It's not necessary to be so complicated, but put this information, put these financial statements in your presentation, not just for evaluators, because the financial model is one part, the very important part of your business. You need to have a good idea, but if you don't have money, no tengo dinero, española, no tengo dinero, we have a problem. We are not so corporate social responsibility. Yeah? Okay, you understand now. Okay, we can continue. First, income statement and profit and loss statement. Or profit and loss statement. The second one is balance sheet. The third one is cash flow statement. It means how we produce and spend our cash in the company. It's very important part for success of our business. Okay. Without water, no tree can survive for long. No business can survive without cash, dinero, money. Okay. The cash flow statements show where the water went in your business. When you see the income statements, the main question is how much cash was consumed by the income statements. For our balance sheet, how much cash was consumed in growing the balance sheet. Okay. It's very important part for your presentation. It's very important part as a basic financial statement, cash flow statement. The cash flow statement connects the income statement to the balance sheet. Okay, don't forget it. Here we have some parts of statement of cash flow for all the three winery. We need to take care about operating cash flow, investing cash flow, and financing cash flow. And we need to take care about the cash when you start your business, plus or minus without cash flow statements, and we have now information about cash at the end of the year. Balance sheet is in the period of the, is not in the period of the time, is at the time. Cash flow statements is a similar like an income statement or profit and loss statement from the period, from the 1 year. They measure in the time. Yeah? Okay, Martin, please. Cash flow statements represent measure of business success defined by cash. It means inflows or outflows. Just to take care about the money. Cash flow statement just to watch what we do with your money, with your real cash. This statement has three sections. The first section is operating cash flow inflows or outflows. The second one is investing cash inflows or outflows. And the third one is financing cash flow inflows or outflows. About cash flow from operation. What is our inflows? Inflows is cash collection from buyers of goods and services. Okay. What is our outflows? Payment for materials, payment of wages, payment of leases. One question. Is amortization part of our cash flow statement? Yes or no?
No,
Why?
because it's not.
No tengo dinero. No cash. No cash. Okay. Investing cash inflows, outflows. Cash collection from buyers of fixed assets. For example, if you, if you sell your land, it means that is inflows or outflows. If you sell the land. What?
If you sell the land.
If you sell the land. I send the land to you. It's inflows or outflows? Inflows. Why? Yeah, I bring the cash, yeah? Okay. Also, I buy the land. It means outflows. Difference between cash collection from buyers of fixed assets and payment for land, etc., is net cash flow from investing. The third part of cash flow statements is a part of cash flow from financing. If you, for example, if you take a loan, it means is this inflows or outflows? Take a credit, take a loan, inflows. Pay the interest, outflows. Just to think about inflows and outflows. Just to think that you use the cash. Think about that you have just cash in your pocket and think about it. Okay. Marin, please. Oh. Net income, investing, financing. Sorry. Operating cash flow, investing cash flow, and financing cash flow. Income statement plus balance sheet and statement of cash flow or cash flow statement is a very important part for your business, for your financial model. I prepare some materials. Lana, give it to you some materials about all this presentation to you later, I think so, before we start with the lunch. Later we have some mentors and business solution. You can also ask me some questions about your exam, about your app, sorry, about your application and your idea, what you prepare. Because as I told you yesterday, when I mentor you in the groups, you need to take care about financial model of your business. If you not prepare your financial model, evaluators give it to you to your model minus, yeah. But it's not very important for today, but for your future. When you, for example, start up in the future, you need to take care about financial model and basic financial statements. It's very important also to understand the basic financial statements. Income statement, balance sheet, statement of cash flow. Income statements, think about revenues and costs. Difference between is profit or loss. Think about the cost of amortization, marketing cost, sell cost, etc. What's the balance sheet? What we own, what we owe. What we own are total assets, short-term, long-term, yeah? What we owe, liabilities, long-term, short-term. And capital, own capital, for example. And on the other side is our water. Our water is a cash, money. Statement of cash flow. Success in the business requires a focus on all these three financial statements. You need to focus for all these three financial statements. If you focus just for balance sheet, you just have information what you own and what we owe. You don't have information, do we have a profit or no profit. If you prepare only income statements and balance sheet, not prepare cash flow statements, no tengo dinero. Where is the cash? Where is the money? Okay, everything is clear? Is everything is clear? If you don't have questions, we can continue later in our mentoring. Our individual problems and questions, we can do it after lunch. Okay, thank you very much. See you later, yeah? Lana.
If you don't mind, can I have these slides, please?
What?
Can I have these slides if you don't mind?
Yeah, okay, no problem. Yeah, okay, no problem. Marin can give you.